What's up, traders? For those that don't know me, I'm a top author on the TradingView platform and I'm a swing trader. In this video, we will be speaking about Confluence in the market. So what is Confluence and how to use Confluence to your advantage and to trade the market consistently, generating consistent returns every month. And Confluence, if you want to do this, is something you really need to master. You need to understand what it is, how it works, and how to stack as many odds in your favor as possible when you're taking trades, because in the end, trading is all about risk to reward and probabilities. With this said, without further ado, let's get in the market. Okay, so let's start by defining the two types of confluences that you can have in the market, and then we will define what confluence actually is and how you're supposed to use it. So first of all, there are two types of confluences. So you have intra time frame confluence, or you have inter time frame confluence. Now, what is the difference? What is the difference? The difference is that in this case, so in the intra time frame confluence, you basically have many confluences that are coming from different technical tools that you're using that indicate that the market is supposed to shift in a determined direction. On the other side, in the inter time frame confluence, basically what you have is that different time frames are showing the same view on the pair. Now, what is the best basically option that you will have in the market? The best situation that you will have in the market is when you have both. So you basically have strong confluences both on the same time frame and between different time frames. Now, one very important thing to say is that in the market, you're supposed to be looking for the direction on the monthly, weekly, and daily time frame. The intraday time frames are just for entry. So direction is on the monthly, weekly, and daily, and entry is on the intraday time frames. So this is what you need to know, basically, that there are two types of confluences, either on the same time frame or on different time frames. And the second thing that you need to know what confluence actually is. So confluence is the overlaying of more indications. Basically, you have many technical indications that the market is supposed to shift to a determined direction. For example, here you clearly have previous support, now turn resistance here, that indicate you that the market is supposed to shift to the downside. That is one layer of confluence. You have a technical tool that is showing you that clearly you will have basically resistance around this area. Then you have another indication, so another confluence factor, basically taking your Fibonacci from this high to this low. You clearly see that the 61.8 rejected and the 50% rejected. So basically, obviously, the fib is taken on this way because every time that you want information on a leg, you need to take your Fibonacci on the previous leg. So in this case, if you want information on the retracement, you need to take your Fibonacci on the impulse. And secondly, the fact that the market is rejecting the Fibonacci levels one by one is, again, very strong confluence. Why? For the simple fact that when you basically, for example, have an impulse in the market followed by a retracement, and what you're supposed to do is just take your Fibonacci on the impulse leg, then if you see that the market is rejecting the 61.8, then rejecting the 50%, then rejecting the 382, and basically moving by steps, you have a way higher probabilities that the next push to the downside, the next impulse to the downside is about to develop. So here you clearly see that you have two confluences, one given by the fib and one given by this previous support, now turn resistance. So that is why your job as a trader is to stack as many confluence layers, basic confluence factors on your side as possible. And this is a clear example of a intra time frame confluence, because these two confluences, so the fib and the previous support, not on resistance, are in the same time frame. On the other side, let's make an example of a inter time frame confluence. For example, let's zoom out and let's go on the monthly time frame. Now on the same pair, on the monthly time frame, you will obviously see that you have a very strong impulse from this high all the way to this low. And all of this movement inside of here is just the correction of this huge impulse. And after a correction, you want to see continuation to the downside. So taking your Fibonacci from the high all the way to the low, you can clearly see that here you have a clear scenario of inter time frame confluence. What does it mean? It means that you clearly have a 50% retracement from a monthly time frame that is getting rejected after it has already been rejected multiple times, increasing the probability that that push to the downside was really about to happen. And again, dropping down on the daily time frame, so checking another time frame, you clearly have here even more confluence on the daily time frame, so more inter time frame confluence, given by the fact that you have this impulse, correction, and you're expecting the next impulse to the downside. And if you take your Fibonacci from the high to the low, you clearly see that the market is rejecting the 382 Fibonacci. So as you can see, you have both many inter time frame confluences and intra time frame confluences on this pair. And that is the reason for which I already spoke with you about the possibility to take the short on this pair inside of this area in the first video I made about Euro AUD, and that is the reason for which we took this trade with the students, and we are now running in very good profit on it. Now the students that don't basically want to keep this trade long term have already exited the trade for a 1 to 5 risk to reward, and those that want to hold it long term then can keep holding on the trade risk free and just trailing their stop loss in profit to lock in profits on the trade.
Hope you enjoyed the video. If you did, make sure you smash that like button. It really does support the creation of more free content for all of you. Also, make sure you go check out the mentorship program. It really shows you all the rules of our strategies, how you're supposed to approach your trading, as well as my personal coaching each and every day. I answer all of the questions that my students have, and I give you my complete watch list with all the pairs where you're supposed to take the entry, the stop loss, the take profit, as well as all the rules for entry. And this really does help you master all the strategies that you basically gain access to as soon as you sign up. Because as soon as you join the mentorship program, what you get is the complete rules of all our strategies. So the TL-CTL strategy, the ICI strategy, and the WM strategy. So if you want to take your trading to the next level, I will see you all on the mentorship program.